Morning, all you traders, value investors, hype dorks across the fruited plain. Let's see what chaos is going on there today. All right. Welcome back, everybody. Welcome in this morning. Somebody just asked the question. I was going to type it, but Mycola just asked, sounds reasonable. Did you have a finance degree before you started trading? I do not have any degree, and I have a degree in, I did pre-med biochemistry, and what am I trying to say here? So I went to medical school for 2 years, dropped out, but the only finance class that I've ever taken in my life was Accounting 101, and I was failing it so bad that I had to drop out. So that is the extent of my business degree life. So that's why I'm not a big. I know Jan, I was teasing. I said school sucks. I don't like school. I think it's. I want to. I've gotten to where I am learning on my own. So even when I was in medical school, and I think those of you that are physicians or, well, physicians maybe not in academia, but physicians or people in medical school right now, you know, it's a lot of self-taught information and whatnot. So there's really not a school's overrated in my opinion, but I digress. Let's move on. So the market is going crazy. And yesterday I did a story where we talked about Apple, and I got a little flustered because I was saying that people were saying that everybody's going over to Apple. This is what this person said. I think they were from Goldman Sachs. I can't remember. Don't quote me on it. They said everybody's rushing to Apple because it's a sustainable business. They have tons of cash flow. And I said, okay, but if that's the case, then if we're going to safe havens with companies that have cash flow, why aren't we going to Microsoft? Why aren't we going to Google? And the point was, even on Monday I think Dow was down 900 points or something like that, 2 or 3%. Everyone was saying, why are we not? But Apple was up that day. Apple was up like 3 or 4%. And the reason was because they're a cash flow business, very good. And I'm like, why aren't we going to Google, Microsoft, et cetera? So yesterday, Apple goes up another 4%, goes to $170 a share. This morning, we look at it. $159.91. Now let's go to this story about Apple. This is what I just take everything that these people say with a grain of salt. I do this show for entertainment for both myself and you, but take it with a grain of salt. Apple tells suppliers iPhone demand has slowed. So the point of the story yesterday that the woman wrote was that even if there's any kind of slowdown with Apple, people are still going to go there because it's a safe haven, because they can withstand any kind of pullback that has to do with supplies, that has to do with COVID, anything like that. And now you have a stock price that dropped $11 in a matter of less than 8 market hours because of suppliers' demand. This is nonsense. These people are full of it. Apple tells suppliers iPhone demand has slowed near holidays. Okay, Apple is suffering from a global supply chain crunch. It's nothing new, but demand is slowing. It's not so much the supply chain. People are getting sick and tired of trying to find the iPhone 13. That's basically what it comes down to. I pre-ordered my mother an iPhone 13 at 8:03 on the day that you were supposed to be able to pre-order it, and I got it for her. I went back 15 minutes later to make another order just for fun. I wasn't trying to get another iPhone. And it was already pushing the date out to the beginning of November. And now I have no idea what the date's at. So they're certainly having issues. But for me, I mean, once you get to, I'm a tech geek. Once you get to December, I ain't buying the new iPhone. I'd rather wait 9 months to get the next model. So Apple has cut its iPhone 13 production. It already said that it's going to cut it down to 10 million. It's going to cut it down 10 million units, down from its target of 90 due to lack of parts. The company is still on track for a record holiday season, but it won't be a blockbuster quarter. Highlight this. Remember this. 9:04, December 2nd. Remember this. It won't be a blockbuster quarter. Let's see if it's a blockbuster quarter. This could mean that people are skipping the iPhone 13 altogether and waiting for the iPhone 14 to come out or whatever you're going to call it. Apple has not commented on the story, but sheesh. Driving me nuts. These people are just something. I'm reading through your comments right here. Most physicians have $1 million of debt. Yeah. Do you still agree? No, I'm not gonna do the school thing right now. Maybe in a little bit. I like Google for phone service. Google, what's it called? Google, what's the phone service called, guys? I used to have Google Project Fi. Google Project Fi. It's a good service. Only problem is it uses the towers from T-Mobile, which are, how should I say this? Not the greatest. The MLB Players Lockout. I like baseball. First stoppage since 1995. And of course, the Indians were like having the best season of all time in 94. And then they got locked out and didn't get a chance to play in the World Series. But whatever. That's Cleveland for you. Rob Manfred, commissioner of Major League Baseball, said that we believe an offseason lockout is the best mechanism to protect the 2022 season. We hope the lockout will jumpstart negotiations and get us an agreement that will allow the season to start on time. This is a defensive lockout, and it was necessary because Players Association vision for Major League Baseball would threaten the ability for most teams to be competitive. I don't know. I don't know anything about it. If you want to talk about it, talk to Paul. He loves this stuff. Where should we go from here? What about Jerome Powell? Jerome Powell says that the Fed may accelerate the winding down of bond buying. All right, here's the deal, guys. I wrote down some notes here, so excuse me if I'm looking down every few seconds, because I wrote this down yesterday. I was sitting in my house very quietly, staring at the wall, not even exaggerating, and I was thinking to myself, what is going on with this market? Because I had a conversation with somebody yesterday, and we were talking, and I said, you see COVID numbers come out, Omicron, this and that. The market collapses. Next day, it's back up. Or midday, it's back up. Jerome Powell comes out and says they're going to taper. Everything crashes, comes back up. Now, I'm just like, what? I can't get a read on anything. And not that anybody can predict markets, but you can generally get a day-to-day read of which way things are going. So when we're looking at the Fangs, for example, Fangs, big tech, anything like that, they love low interest rate environments because it gives them the opportunity to borrow at a very cheap rate, and that's very good for tech. What we're seeing now is all of these Fang stocks starting to pull back down. And that is a very weird thing, especially rates are down from their highs, 144 basis points from their highs. That's a lot of basis points. So when the markets are down, the yields are down, because people are shifting to the bond market. So when the market falls because people are shifting over to the bond market because they look at the bond market as safety. So when the bonds are bought, the yields go down. That's why we're seeing these dropping yields. But even when we're seeing these dropping yields, these tech companies should be soaring because the yields environment is getting better for them. But we're not seeing that right now. So if you see the yields dropping, I wrote all this down because I don't want to screw it up. The big tech stocks are going down. Everybody's running to bonds. I'm telling you that at some point the party has to end. That's what has to happen. But when it comes to this taper, They're talking about doing a faster taper in December 14th and 15th. I think their meeting is. I think it's 14th and 15th. But they're talking about doing their taper. I just don't think that they're going to pick up this taper because they're seeing this week what's happening when all they do is rumor about tapering. And their whole premise of tapering came on the basis that jobs were going to keep coming back and coming back and coming back. But if we have this Omicron, there's a couple things in this article. You're not going to see that. As far as gold, so the dollar is going to follow the yields. The dollar is stronger than normal right now, but the dollar is going to follow the yields. And as soon as the dollar starts falling, gold is going to start to rise. I'm telling you, that's going to happen. So pay attention to it. That's what I got for you right now. And that's what happens when I stare at the wall and watch paint dry. So Powell says he may accelerate the winding down of the bond and treasury purchases. The economy is very strong and inflation pressures are very high, no doubt. It is therefore appropriate, in my view, to start wrapping up tapering perhaps a few months sooner. But they better figure out what's going to happen with this Omicron stuff because there's downside risk of employment and economic activity, and it ain't going to be good if they start doing everything at one time. Now, it has to happen anyways. This has to happen. They've been doing this for way too long. So it's eventually, it has to happen. But I don't know if they want it to happen right now. Well, they're never going to want it to happen at any time. So it really doesn't matter when it happens. The greater concern about the virus is it would reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions. And then it came down here. This is funny. Janet Yellen, she's in charge of the what is her role there? Finance chair or something like that? I have no idea. But she said, America, this is in regards to the debt ceiling. America must pay its bills on time and in full. If we do not, it will eviscerate our recovery that is going on right now. So she's talking about the debt ceiling. So America must pay its bills on time. Last I checked, borrowing from Peter to pay Paul is not paying your bills on time. That's just creating more debt in a different area, but what do I know? Why inflation problem will get worse. Yikes. Okay, so the pandemic pulled, so this is from, who wrote this article? Randolph Forsyth. Okay, I have never heard of him before. But anyways, his argument is basically that the pandemic pulled forward lots of spending by consumers, rush into automobiles, which is fleeing lockdowns because people were moving to the suburbs and stuff. So all of this, it's not just automobiles, but everything caused this issue of inflation. So he gets down here and he says, Cornerstone macro forecast the payback of pull forward demand will result in slowing sales and swelling inventories, a broad manifestation of a surf it on hand sanitizer that we're seeing on shelves. So basically he's talking about Clorox. That in turn should bring inflation off boil next year with inflation back to 2%, blah, blah, blah. The next phase of the inflation cycle will be in consumer services. Owners of houses is going to be the most significant component. It's not going to be goods, which is a weighing of 23%. Home prices have roughly gone up 20% according to the Schiller Index. Renters have only gone up 2.9%. He thinks that is going to go a lot higher. The Fed is misguided in thinking about inflation. It will abate around 2%, as implied by the most recent set of expectations published in September. He thinks we're going to see everything inflation, and he thinks it's going to be very, very high. I tend to agree, but what do I know again? I'm just here to tell you the news. Okay. Jack Dorsey. This guy I don't know if everything happened at once and they wanted to announce everything at once, or he loves being in the news before he makes his departure. But Jack Dorsey, Square is changing its name to Block. It's going to stay on as SQ ticker symbol in the market, but it's changing to Block, and it's because it wants to focus on technologies such as blockchain and expand beyond its original credit card reader business. The name changes effectively on December 10th. Block will still trade under SQ. You're welcome. Dollar General. This is cool. I like this one. Dollar General tested a store for wealthier shoppers. Now it will grow to 1,000 locations. So it's called Pop Shelf. And they're going to be around by 2025. Well, they're already kind of around. But Dollar General debuted Pop Shelf about a year ago, aimed at wealthier suburban shoppers who enjoy the hunt for a good deal. Tennessee-based discounter on Thursday said it plans to have approximately 1,000 stores by the end of 2025 fiscal year, including about 100 more locations opening next fiscal year. Pop Shelf is a way to attract new customers and drive up profits. Its target is going to, oh, look at this. Not woke. Its target customers are women who live in the suburban areas, have an annual household income that ranges from $50,000 to $125,000. They're going to have home goods, decor, party supplies, their own private brands. 90% of stuff at Pop Shelf will be $5 or less. And they're going to have fruits and vegetables. So get all your fruits and vegetables there. And if you want to have lunch with Bill Ackman, I do. I'm not paying for this, though. Well, if it was in the 50, 75 range, sure. But now it's at around the 210, 250 range. So if you want to have lunch with Bill Ackman, proceeds go to David Lynch Foundation, which promotes the practice of transcendental meditation for veterans with PTSD, inner city children, and women who are victims of domestic violence. And if you just start looking at these, it went for this. So he's trying to do the whole Warren Buffett thing. Don't have lunch with him. He matches it, goes to charity, etc. So, and if you can become his friend like the first winner did, and now he's invested in some of Pershing Capital's businesses. So that's that. Follow us on Instagram at TraderMo_EM. Guys, on Instagram, somebody copied my account and then they blocked me, so I can't even report them. So if you see them, block them. I follow 8 people on Instagram. 8. Not 47 or 50 or whatever the number is. I follow 8 people on Instagram. So if you see the person, they're not following 8 people and they're following more than 8 people, it ain't me. I have no interest in scrolling through and looking at pictures of anything that you post. No offense. But that's just what it is. All right, let's look at the yields. The yields are dropping 10-year. We're going to keep a watch for these yields to start inverting, maybe sometime in the near future. DocuSign reports after the bell today. Kroger reported before the bell. Looks like they did pretty well. They're up about 6%. Big Lots, Hibbett Sports, and Dole report tomorrow, so be aware of that. If you want to join our software, head over here, everythingmoney.com. With the software, you get the 8 pillars, retirement calculator, stock analyzer tool, 8 pillars portfolio, which will give you could basically build your own ETF. Here is, you get all of our latest YouTube videos that pop up here, endless news. When you click see more, it just continues on and on and on. Click join, head over here. $30 a month gets you access to the software and the Discord community. If you want to join the Bid and Ask Nation with me, $80 a month right now. Jump in, get my monthly seminar, which I'm doing this Saturday at 9:30 a.m. Eastern Time. Don't forget, write down your questions, bring it on in. Employed Trader Series, Stock Trading 101 series. Yeah, you get everything. And you get to talk to me on a daily basis. Who wouldn't want that? $500 a month gets you into Paul's Super Shorts. If you want to do a one-on-one trading session with me, $750, 3 spots remaining right now. My calendar is booking up quickly, so I have limited time in December. So if you want to get in there and schedule it with me, do it now. And if you want to do a real estate deal with Paul, $10,000 for 4 hours of his time, and you will be able to buy whatever you want to buy in the real estate biz. So that's it. Send me some stocks. I'm going to scroll through your comments here. I just want to scroll back and see if you guys were saying anything while I went on my tangent about staring at a wall. Somebody said I still haven't smoked crack. That's good. Neither have I. Congrats. You still have to agree it's good. There's an option for school. I mean, there's a reason for... Yeah, education is good. No doubt. Journalists... What happened to Facebook stock? We can take a look. Apple is the next dying company. Sure, whatever you think. Please look at Baba on Facebook. Everybody is getting way too emotional about Alibaba. I'm not getting the iPhone 13 because it's unlucky number. Why can someone comment on Baba and why it's so big recently? Google it. I hate T-Mobile in Dallas area. I hate T-Mobile in every area. If our economy will die like the turkey. Oh, what are strong buys at the moment? I don't know. All right, let's go. Let's look at Apple. So here's Apple. It shot up yesterday. I didn't understand this at all. Because cash flow, guys. Duh. And then it came all the way back down here because cash flow doesn't matter today. It only mattered yesterday when everyone was buying it and there was a ton of volume. So there was a ton of volume yesterday and the day before. That's when cash flow mattered. Now cash flow doesn't matter. Got it. $159. So you're going to just consolidate down here, and this is your new resistance point, which sucks, but it is what it is. So you're going to have to be very careful with this one. I I wanted to do what did Lizzie say? She typed it 1,000 times. XIAOMI. I have no clue what this is. It's a penny stock. It looks like over the counter. Yeah, it is a penny. All right, so this thing dates back to, when did they go public? March 16th. So we don't have enough data. If you want to day trade it, you can, but yeah, I don't know. Let's see. T-Doc. This is disruptive. Hold on. This is the next big thing in hospitals. Don't forget it. Just kidding. For those of you that don't know. All right. So this is our support level right here. We're kind of at it. If you have been shorting this, great job. Let's zoom in a little bit more. Yeah, excellent job if you've been shorting this. If you get an engulfing candlestick today, continue to short it. If you get an engulfing candlestick over here today, continue to short it. This is a good looking short, and if you've caught it, good job. What else do we have? Dropbox. Haven't done Dropbox in a while. DBX. Another great looking short. If you've caught this, great job. I love the direction it's going under all four major moving averages. Engulfing candlesticks on the way down. Great selling volume coming in. Very good. Whoever caught this, good job. If you get an engulfing candlestick, you can continue to go with it. But with that being said, make sure you're using stops at this point because we're getting a little bit oversold. Somebody just said, why do you not publish your portfolios in Spanish? Because I don't want you copying me. Hey, Killer Mamba, type ATVI one more time. Same with you, Mitchell. Do it one more time. See what happens. I subscribe to EM. It's been great. Wondering if you look at uranium. Give me a uranium ticker and I'll run through it. Visa. We looked at Visa yesterday. It was falling apart. Yep. So yesterday you could have added. I said yesterday, if you get an engulfing candlestick, you could have added. Beautiful engulfing candlestick. Good selling volume that happened. Just make sure you're using stops. If you caught this yesterday, excellent job. Okay. I like it. Mitchell, I respect it. But, sorry. Zynga, Z-N-G-A. Is this thing is this old enough? Yeah, it's old enough. Okay. Zynga. Okay, so if we zoom out here, so you're holding a support level right here. Support. Very good. So you're holding a support level. So I don't think that this can go much lower. Just looking at where the stochastic is here and here. Now, if it breaks and starts moving down in this direction, I can see you being able to short this down to $4.40 if you can short a stock like this. This stock may be considered a hard to borrow. So be careful with that. Well, you don't have to be careful. It's going to tell you. And if it's hard to borrow, you're going to have to pay an exorbitant amount of interest on it. So Beyond Meat, BYND. Talk about disruptive. Nothing says disruption like fake meat that is falling apart. Ha. All right, so here's your high. It was the greatest thing since sliced bread. Well, it was the greatest thing since a filet mignon. And then it wasn't, and now it's not again. So RIP to all of the fake cows. And right now, if you want to keep shorting this, you certainly can try. I wouldn't have a problem with it. Just make sure you're using stops. Put stops in place. Probably put it on a daily chart and go and roll with it that way. TRV, por favor. Travelers Company. Is this Travelers Insurance? All right. If it was Travelers Insurance, it would probably be called Travelers Insurance. So, all right. Travelers Companies, you're holding a support level right here. Good engulfing candlesticks. So this is a tough one for me. Because over here, it looks like you can continue this rundown on the stochastic. But over here, let's zoom in just a little bit. I want to just get a little bit more detail before I give you some fake news. So I'm not loving the direction of the stochastic. This has taken a very sharp dive, and your yellow line should be more. Hold on, I gotta move the screen. Hold on. Your yellow line should be more like this, where you're kind of running yellow line with red line. You see how they're running together? This one is kind of red line is running and yellow line is lagging. We don't like that. So there's something going on here. I think I would just be careful with this one, especially because you are at this support level that I just drew in there. So yes. Okay. T-Mobile is a $300 stock. Go long and you won't regret it. What? Okay. If y'all want to listen to Eddie Crypto, go for it. It's a $300 stock and you won't regret it. All right. Spotify. But Eddie, thank you for the donation. And if you really want me to look at it, I will. Just tell me. So we're sitting at a support level right here. It would be very hard for this thing to keep going down if the entire market doesn't go down. This is another one of those ones that should be going up in this environment. This is a company that should be benefiting from lower interest rates that are happening out there. So when these yields drop and these interest rates drop, companies like this should be moving up, not down. That's the problem. So we're going to have to pay attention to that. The bank, let's see what the banks are doing. What is XLF doing? XLF should be moving down, but see, it makes sense. When rates were starting to tick up, the banks started to move up like so. Because banks love higher interest rate environments. They make more money. And when yields start falling and rates start falling, you get this direction. So it's banks lead markets, guys. This is what happens. So we're going to see what has to happen. Will Tesla run down again? I love looking at Tesla. Speaking of looking at Tesla, that car, I mean, it's just a phenomenal car. They really make an amazing product, and I'm not just saying that. Really awesome product. So, yeah, okay. I don't know what's happening with Tesla. This is just purely consolidation right now. We're just going to have to hang in here. I don't think you're going to get some boom this way or some boom this way anytime soon. Now, if this yellow line starts to creep into the sweet spot and we get red line going like this and yellow line separating and going like this and creating that gap, that big gap between them, then yes, I can see a move start down, get to this $1,000 range. I still think it's going to come down to around this 920 where this gap was, but it's not time yet. So, all right. Okay. We didn't look at Alibaba yet, but we can. Let me hit up Dollar Tree right first. If you can look at Dollar Tree, I'd appreciate it. I'm trying to see if my chart reading and my thesis is correct about a possible short play today. DLTR. So I'm assuming that you mean from a swing trading perspective. Thank you for the donation. I'm just going to pick a charity and send your guys' donations to them. And what was you guys? There's $10. I'll throw in some money too. I'll wherever I put the charity. Let's see here. Yes, so I like that you have this movement down today, and I think your thesis is correct. Now, if I would wait until you break this level. What is this level? This level is $129.44. So if you break below $129.44, you're going to have a really nice run. I think you're going to fill this gap down to $115. This is a really good looking stock. Good job, whoever picked this. AMKJJRCLS. WBA, Walgreens Boots. What do we got with Walgreens? So, Walgreens, remember when they reported earnings? Yep, remember when they reported earnings? Their stock price was down here. All of a sudden it came up here and everyone was like, Walgreens is it. This is it. A couple weeks later, here we are. Down holding this same support level again that we always come down to hold. And it's actually even lower. So if you want to short Walgreens, if you get an engulfing candlestick today, go for it. You could have done it yesterday. Good looking short. Just make sure you're using stops. Very good job, guys, whoever did this. That's $10 of gas money, Mo. I don't have gas anymore, so I don't know what that means. Facebook. Holy moly. Hell yeah. I love it. All right, Facebook is falling. This, again, yesterday. This was yesterday, this big candle. This should be going up. It shouldn't be falling. It shouldn't be doing this. So it dropped below its 200-day moving average. It closed below its 200. It's going to open below its 200. So guys, short it. If you want to short this thing from a daily perspective, I would do it over here on a daily chart. I still wouldn't do it over here until you get a rollover. I still wouldn't do it until you get a rollover. But these stocks should not be falling like this. Weird flex. Jesse, that was a good one. Baba just keeps falling. Let's see where our support level is. Our next major support level is at 109. So we'll see what happens. If you want to play it on the short it in the short term, go for it. Why not? I'm an average of 126. Should I buy more? Listen, it's your decision. I'm not telling you to buy or sell, Baba. I don't tell anybody to buy or sell. I just tell you what I do sometimes, and sometimes I don't. Zoom. With the Omicron, Zoom should go back to the moon, so we'll see. Crazy fall from Zoom. Let's see. They're sitting at a pretty strong support level that is going to be at $180 a share. Now, if you want to short this thing, you certainly can on an engulfing candlestick today if you get that breakdown. No problem there. Just use stops. Make sure you're using stops with this thing. All right, I saw one that I wanted to do. United Airlines. We haven't done an airline in a very long time. Again, beautiful. If you wanted to short this yesterday, you absolutely could have. Great engulfing candlestick, taking out the previous low. Good selling volume. This is looking great. Same thing. If you want to short it, use stops. And I keep saying use stops because your stochastics are on the bottom like this. So that means that they have a higher probability of turning up. But if you caught these things, good. And if you want to catch them, you still have an opportunity. Smith & Wesson, SWBI. They report Friday, is it? December 2nd. They report today. So they maybe report after the bell. Okay, so they report after the bell. So here's what I have to say about this. Do not be in this right now. Take your profits today, or sell out of your position, or lighten your position, or whatever you're going to do, because I do not want you guys to get caught in Smith & Wesson and get smoked. They can report the best news in the whole world. They can report amazing revenue and amazing earnings per share and get smoked. And they can do the opposite. They can report terrible earnings per share, etc., and they can go to the moon. So I don't want you guys to get caught in that. Please be careful. NCLH. I always do NCHL. Reminds me of the NHL. All right, they've been getting beaten down pretty strong of late. This is a 50% stock as per usual. 50% high, low, middle ground that it can't break through. It's about $36 a share. It can't break. So we're holding a pretty strong support level right in this area. So I would just wait, let this thing rebound up, and try to turn it. I don't think I would be playing these stocks from a long-term perspective at this moment. All right, I will do this one, and I will do one more, and then we'll move on to tomorrow. Hold on. Sorry, Mo, when looking at the stochastic, do you look at the year-to-date on time? So I typically look at 30 days at a time, and then I'll zoom out to about this far, to a year or more, and just kind of see, or 3 years. I just want to see where I'm baking in support levels. Now, the farther out it goes this way on the chart, the less that support level matters. But I always zoom around. But typically, if I'm looking, I want like 30 days, look at the stochastic and go from there. So good question. Starbucks. Starting to make this move, but you notice that we're pretty horizontal on this stochastic. I would like to see something, this red line, that's more shooting up, more vertical. So we're going to have to see if this thing breaks down like this today and gets an engulfing candlestick. Short this. You could probably get a good short to about 104. But other than that, I would probably just be patient with this thing, see what happens, let something happen over the next couple days, and go in that direction. All right, give me one more. Give me one more stock, and I will rip through it. Square, you got it. This person just said, so are we supposed to get out of all of our positions through their earnings? I'm a little confused. So, no. Not all your positions, just if you're trading. All right, Square. Square is holding a support level, but it's actually broken below that support level, which is interesting. So pay attention to this. If this thing starts creeping down this way, you can get some kind of short going down to $160, which is weird because this is a very disruptive stock. So I don't really understand why it's going down. But 160 is probably the next support level. So if you get an engulfing candlestick down like that or like this, go for it. Just make sure you're using stops because we're in this oversold area. So that's it for today, guys. I will see you all tomorrow, same time, same place. Do not forget the seminar Saturday morning, 9:30 a.m. Eastern time. Bring me all your questions. We'll just do a Q&A session. I know there's a lot of new people, so it'll give you a chance to just do a smaller group, and we'll knock out all your questions. Bring them all. And lastly, community members, remember, we have the live stream today at 2 p.m., and also book club tomorrow at 10 o'clock in the morning. So don't miss that with Paul and myself. And we'll go from there. I'll catch you all on the flippity flap.